Our childcare expenses are now more than our mortgage on a 15.
So I just watched this video and I can completely attest to her frustrations as a mom because I have 3 little boys, all toddlers, 6, 4, and 2, and I've done the whole preschool daycare thing and the expenses of all of that, so I totally understand where she's coming from. My only question in this video, which I'm really curious to learn more about because it seems like it's a budgeting money mechanics issue there. My question is why did she go with the 15-year mortgage? I don't know when she bought the house. I don't know the interest rate she got. But if she bought the house a couple years ago when rates were really good, let me just show you this. If she is now paying more in child care services than her mortgage, she bought a $450,000 house. I'm going to assume she put 20% down because this is very similar to a Dave Ramsey model. I'm going to guess Minnesota, your property taxes are about 1%, maybe more. Let's just call it 1%. Your insurance on a house, let's call it $500 a year. No HOA dues, I'm assuming. But on a 15-year term, your mortgage, yeah, it's going to be right around $2,800 a month. So yes, your child care expenses will be higher than that. It's just they're only going up because the cost of labor is only going up. Now look at this 30-year. Had she done a 30-year, again, this is with interest rates at 3% if she bought this house a few years ago. Look at the difference on a 30-year with everything else being the same. She would literally be $1,000 less a month. Now granted, she's paying off the house, yes, in 15 years sooner, but right now in the near term, that doesn't help her because right now she's having a budget issue where she could have had a surplus of $1,000 a month to cover this expense. Look, people, the rule of thumb in budgeting and doing money and doing mortgages the correct way, you want to borrow at debt rates like 3% to reinvest the capital that you have on the sidelines into equity rates that pay higher, like 10% on the Standard & Poor's S&P 500 index. Anything above that is called the hurdle rate, whatever you're investing in. But my point with that is you will not be running into these near-term problems because your kids will grow and you will get out of this phase. But right now when money is really tight and you're frustrated, just remember, if you want to pay your mortgage off sooner, take the 30-year and put more money at it each month. The bank isn't going to have a prepayment penalty. They don't care if you want to pay more towards the principal. You can do it anytime you want. There's all types of videos out there that show you can pay your mortgage off sooner. If you have the ability to finance debt for 30 years as opposed to 15, you always take it. Always take it. And you won't be in these problems. So I understand her frustrations. Believe me, I'm a parent. I have 3 little boys. Money is tight right now. But it's harder on yourself when you do these types of financing. You've got to learn basic finance. You got to know how money works. Otherwise, you're going to be in problems like this. That's all I got. See you on the next video.